Cool. So this morning's session is on ecosystem payments, now and into the future. I'm personally quite excited to have this chat because I want to learn a lot more in this space, and I see that there is potential to add a lot of value to some of our farming systems here in New Zealand. For everyone who doesn't know me, I'm Conan. I am a farm consultant based here in Canterbury. I work for a company called Groundshift, and I also host a podcast from the soil up. So without further ado, we'll get into these very knowledgeable people right next to me. First up, Tim, can you give us a bit of an intro on who you are and what work you're doing in the ecosystem space?
Oh, kia ora. Tim Booth. I work for a small forest company based in the North Island called Tāmata Hauhā. I'm the company's commercial manager, so I do a bit of business development as part of that, and we do a lot of trees on farm planting. We fund and develop projects and then enter them in the ETS and share the revenue with the landowner. So that's our business model. But I'm relatively new to ecosystem service payments as a concept and as a practice. So it's great to be here to have an in-depth discussion about these things and what they mean for landowners and businesses. Kia ora.
Morena koutou, ko Renee Raroa tōku ingoa. My name's Renee. I come from Te Tairāwhiti on the far east coast of the North Island. Yeah, thanks team. And yeah, there on our whenua Māori land block, Te Kautuku, which is in Rangitukia on the other side of the Waiapu River, is almost as east as you can get. We have been transitioning from mostly beef operations back to native cover for about 85% of the whenua there, and doing this as a pilot in nature data markets. So attracting revenue in to support the work to transition, so that the whānau can work at home, because it's never really been a profitable business, and doing this through the nature market space with the Toha Network. So I've been part of the Toha Network team, building the infrastructure, building the infrastructure to hold these nature data markets in a way that returns the revenue back to those on the land as much as possible, and also connected with Indigenous groups globally who are looking at nature data markets to ensure that those who have been holding their lands for a long time see those returns as well. Hi, it's me.
Thanks. Kia ora koutou. Sean Weaver, Ecos. A long time ago, I started to get a kick out of looking after the place, and I don't know why. Maybe it's endorphins or dopamine or something, but I found out that I needed to get a hit reasonably regularly. I started off looking after rainforests in Fiji, which is where I'm originally from, and the hit felt so good I thought I needed to go pro and become a dealer. I needed to finance my habit. There's not enough grant funding in the world to look after the world's environmental problems, so that's just a mathematical certainty. And yet there is enough money in the private sector for this task. Also, if the grant funding world and the governments of the world were to fund looking after the place and repair, that means the people who wrecked the place will get a big bailout, and I think that would be dumb. I think the private sector should fund looking after the planet, and also it's got enough money to do it. And so that's why I work in markets. So I came at carbon markets and now biodiversity markets from that perspective of needing to find a source of money to look after the place at a scale that's going to be meaningful. Because we're not going to change the course of history unless we do things at scale, and you're not going to get things happening at scale unless you can unlock a fire hose of money, and unlocking a fire hose of private sector money means playing a private sector game. So that means you've got to borrow money. You can't just ask for free money. You need to give money back with interest, which means you've got to have a commercial model, and so we work in that commercial space. And we focus on the carbon markets as well as the biodiversity markets. So that includes native reforestation, regenerative forestry in New Zealand and in other countries. And we've got about in the joined up company that we've got now, we've got about 80 projects, forest carbon projects around the country, and we've got a few projects internationally. We last year released or launched a biodiversity credit market system, which is now trading, and we can talk about some of that detail through the course of this morning. Thanks.
Awesome. Sean, I might get you to follow up and just kind of frame up what an ecosystem market is, just so we can frame the whole conversation before we get into it a bit deeper.
Sure. I mean, when people grow things on land like this, you call it a farm, and the things that you sell are things like agricultural products, and you're a farmer. If you want to grow something like carbon, then you become a carbon farmer, because it's a revenue stream you're getting from growing the carbon stocks somehow on the property. That could be in the soil, it could be in the trees, it could be in a wetland, it could be anywhere. If you want to be a biodiversity farmer, then you need to sell something in the biodiversity markets, which are new and emerging markets, but there's many different ways to potentially monetize some sort of good shit that looks after the place on land that you're managing. And people have been doing this for a long time, not necessarily in the context of unit-based markets like crediting systems. So corporate sponsorship and farmers who have looked after the land for centuries and for decades have typically paid your bills by charging a unit price for whatever it is that you sell, sufficient to cover all your operating costs. And if your operating costs are going up because you're looking after a wetland, or you're retiring a piece of land because you've turned it into a wetland, if you can afford to do that by raising your unit price a little bit for the stuff that you normally sell, then that's one way to fund this. So crediting systems are just a variation on that theme. The difference with crediting systems is that because carbon credits and biodiversity credits are invisible, you've got to wrap them up in lots and lots of anal retention and red tape to make sure that the people who buy them can be convinced that what they're buying is not bullshit. Because otherwise, you're selling bullshit to people and claiming that you're a virtue signaling, wonderful human. And there's no shortage of that in the world at the moment. And of course, the greenwashing backlash is a really appropriate thing, because there's been too much fraudulent virtue signaling in the business world. And we need to make sure, and this is just basically accountability. So the way that markets work for payments for ecosystem services is that they have to be based on standards. Those standards need to be scientifically robust, otherwise they're nonsense. Your good shit that you're delivering needs to be measured, reported, and verified to a standard. It needs to be verified independently, not by a chimpanzee, but by somebody who knows what they're looking at. And so there needs to be a quality system in who the auditors are. And global carbon markets have all of that infrastructure. Units that you issue need to be issued in registries, so that I don't sell one unit to you and the same unit to you and get money from both of you by double dipping. You need to have quality systems to make sure that that financial integrity is there, and this is the infrastructure of registry systems. Again, the carbon markets were built on that basis. The emerging biodiversity markets have a similar infrastructure, mainly so that if somebody is saying to themselves, I'm going to spend money on that, causing that good shit with my money, I'm confident that my money caused the good shit. The good shit wasn't going to happen anyway, because if it was going to happen anyway, then I'm wasting my money. I'd be better off flushing it down the toilet. So there's all of this sort of financial integrity that goes into ecosystem services, the markets. The trouble is, though, if you want to wreck the planet, you don't have to jump through all the same red tape, right? And so if you're a Malaysian logging company wrecking forests in the Solomon Islands, you don't have to jump through these kinds of hoops. And yet if you want to save those same rainforests, which we do, you've got to jump through so many hoops, and the height of the bar is really high, and it's got even higher in recent years, and that means the loggers are just going, yeah, we're off, no competition. So there's a reality, a kind of a reality check in this too. We need the high jump bar of integrity to be high enough for it to be real, but we don't want to make it so high that nobody can do it. So, because that's the reality. We need to compete with people who don't really care about the place. Anyway, I'll pause there.
That was a great spiel there. I think that resonated for a lot of people. So I guess we've got quite a few farmers in the room with us now. What's the opportunity that you're seeing for farmers and landowners, Renee?
I think in Aotearoa, New Zealand, because these markets are emerging, we have an opportunity to kind of be out ahead of these, and not only that, but to inform how they are designed. So as a developed nation, often we're not the receivers of international funds into these programs, but because we can be at the cutting edge of the markets, getting involved in that space and being the designers of them, I'd say is kind of one of our biggest opportunities right now as they emerge. Yeah.
I'm going to follow that up with, so how, when we have these emerging markets coming through and we're designing them, how do we respect local decision making and I guess long-term care for the whenua?
Yeah, that is really, I think, what should be at the heart of the design of these things. So the respect for the local decision making as the markets emerge needs to be designed with and or by those who are actually on the whenua themselves, because I guess there's no, you can't really design in a way that's going to work for those on the ground if you're designing from your ivory tower somewhere or, you know, in the middle of the city. You really want to be as close as possible to the front line of activities, testing out the designs and working with those closest to the front line to ensure it's going to work. Yeah.
Agree. And Tim, in your experience, you're working with forestry, what's the opportunity for farmers and landowners around that?
Well, I'm looking around the countryside, out the tent here, and I'm actually seeing a lot of trees. And you drive around the countryside all over New Zealand, and you see the same thing for most of the landscape. And that's a very different picture from what you get when you hear people talk about the ETS, especially in the media. I mean, probably at the pub as well. The New Zealand ETS has been determined in the public imagination as something that is a pine-dominant, ecologically destructive, extractive, exploitive system, and that's a perverse outcome. That's something that economists talk about. A perverse outcome is a result of a new opportunity that wasn't intended by the designers. Keep in mind, the designers of the NZETS were economists. I don't think they were farmers. So the landscape that I see when I drive around New Zealand, that's the kind of landscape that is in fact able to be expanded and developed through what is now the dominant ecosystem service payment, which is the NZUs coming through the New Zealand ETS. If you want to transform your farm into a farm that has more trees, different types of trees, different regimes of planting, that can all be done through the ETS, and that gets totally missed in the narrative that's really strong at the moment. So I think that's one of the big opportunities, and that's something that the company I'm with is really trying to develop as well.
So the carbon market itself gets probably the most attention. What is the situation with that market currently in New Zealand, and how do you see it evolving going forward? You can answer that if you want to.
Sean, do you want to? You got a bit of historical context.
Yeah. All of my friends and colleagues that work in the New Zealand ETS, that word, the ETS, I store in my mind in the same place that I store memories of splinters, and broken teeth when I'm eating a salad and there's a stone in there. It's a really horrible experience a lot of the time, partly also because you're lining up the ball and kicking it over, and then all of a sudden the goalposts are now over there. And so then you spend the next few years lining them up, and now they're over there. And this is what's happened in the NZETS and made it hard. The thing with the ETS has also been managed by the government to shift the goalposts so often, and also to tamper with the carbon price that goes up and down like a yo-yo, which means that if you want to look after the place at scale, you have to get money at scale. If you want to get money at scale, you're going to have to borrow it, because grant funders and philanthropists just can't afford the, 20 million bucks for 1,500 hectares of replanting. You're going to have to borrow that from somebody. And that person who wants to lend you that money is going to say, yeah, I really want my money back with interest. And the carbon prices go all over the place like a yo-yo, and I'm not convinced that I'll get my money back, because it's a really unstable system. And so investment just looks at the NZ ETS market and goes, yeah, no thanks. I'd rather go fund the pencil industry or iPhones or something else. And so it's meant that capital it's come into the sector when the price was good and when the price was stable. But because the price keeps going up and down, it's hesitant. The funding finds it difficult to justify going there. And that's why it's important in a forest carbon market to also sell a wood product, because then your cash flows have got carbon and wood. If you're relying just on your carbon and your carbon price is going up and down, you can win your funding at one price, then the price drops, and then you're just, please explain every afternoon to the funder who says, why is the project not working financially? So that's a challenge in this market, and Tim mentioned that there's many species that you can use in the NZ ETS. You can native species, exotic species, various types of exotics. The thing is though, if you want to do anything and make sure that you get enough money back to cover all of your costs, you need to do something that's going to break even and ideally create a surplus. And if you're using species where there's no proven market, well, that's going to be difficult. If it's a very, very large area of, I don't know, some new species that we've never seen before in the market, then even if it's timber, the mills are going to say, well, I'm not going to mill that, because my mills are set up for these species, this collection of pine, Douglas fir, eucalyptus and whatnot. So the business planning around multiple species needs to take into account the financial realities of that market. And also, native species have maybe they all got together and had a conspiracy to say, hey, let's all grow slowly. And the exotic species all got together and said, hey, let's all grow fast. And what that means is the natives they grow slowly. That's the fact. And it means that your carbon credit factory produces carbon credits at a relatively pedestrian rate. And that also they're also more expensive to plant. And so you've got an expensive carbon credit factory that is a pedestrian athlete. And even if you took all exotics out of the system and banned them, which was proposed by the government in 2023, just get rid of them, get rid of exotics. And the narrative then was, oh, well, then the natives could compete in the market. That's nonsense, because the natives aren't suddenly going to grow faster. Your slow carbon credit factory that is expensive is still expensive and slow. And so that's the reason why people around the nation and rural communities aren't saying, oh, the bloody native reforestation covering the whole landscape everywhere with totara. It's not happening, because the economics of that don't work. But however, the economics of faster growing species does work, which is why it's there. If you want to do looking after the place, and you still need to use exotic trees, because if you don't, then your cash flows are buggered. Oh, we've got a wind coming through. Oh, we better pause.
That's the first. Yeah. Wow. Yeah. I mean, it's the first time that's ever happened, so that's many hands.
Hey, so I'll just finish that thought. I entered the NZ ETS market to just plant native trees. That's all I wanted to do, because I'm a hippie. I like planting native trees. I like it. And I kept on coming up against, well, financially just simply not working. So I had two choices. I could quit and go do something else, or I could innovate. And so I decided to innovate. So I put some exotics in the project, and the exotics over here funded the natives over there. And that's what we do. And so we plant exotic trees in our business model and native trees. And the native trees are like children in the economy. They're beautiful, they're really valuable, but they don't pay for themselves. And so the exotics are like the grown-ups in the economy that we need in order to fund the children in the economy. And that's what we do in our business, and that's what Tāmata Hauhā does as well, and other companies that are in this space. But what we also do in the exotic part of the puzzle is we manage them as continuous cover forestry. So we do harvest and replacement, regenerative forestry, doing the sort of wood production that you'd get with FSC type certification for sustainably produced timber. And that stuff funds the native forest that we plant. Yeah, either patches, strips. So, and we've got a model where we can transform a 100% pine forest into 100% totara forest across 34 years, and where the finances work. Financially, as in other words, the business model works sufficient to win investment.
We read a bit of stuff in the media a couple of months ago about some carbon credits and no one bought anything. There's some auctions and kind of no one bought anything. You able to give us some context on that?
Yeah, I mean, the government, the NZETS is a tax in drag. Because basically the government says to the buyers, the big emitters that have a regulatory obligation to buy, it says to them, you can buy these credits from two places. One at auction, when the government releases these credits at auction, or you can buy them from just the forest industry. And because the forest industry, the economics of it is such that it's mostly exotic trees, because if it wasn't, it just wouldn't be working. And so what it means is the big emitters, like the big energy companies upstream in the energy sector, they are required by law to buy carbon credits either from auction or from the forestry companies. And so, they fund that, the energy companies fund that by putting the energy prices up so that they can then generate the revenue to buy these carbon credits. And so that's energy prices that we all pay, right? So we pay that tax every time we buy petrol, use electricity, etc. And this is why the NZETS is essentially a tax. It's not called a tax, and because it's not called a tax, it can survive elections. So in a way, it's quite clever, because we get a price of carbon in the economy, and one way that price enters the economy is through the auction, when those companies have to buy those credits, or when they buy them from forestry companies. And when the buyers don't have too much confidence in what the government's doing, they might not buy them at the auction, or if they feel that prices are too high and they can get them at a lower price from a forestry company. Because in the auction, it's essentially a spot market. But if you're smart, you don't buy your commodities on a spot market where you're responding to prices that might do all sorts of things. You might instead invest in a forest where you produce your carbon credits at cost, and you develop your own carbon credit factory, right? And so that's essentially the other option. So you don't see those trades in the market because they're not traded in the spot market, but that demand is still there.
So the fact that those credits didn't sell at auction shouldn't fill us with dismay. It's not a sign that the carbon market is not healthy.
Well, the carbon market is not healthy because it's a piece of shit wrapped, it's dog shit wrapped in cat shit, right? So it's not a good thing anyway. But it's what we have, and it is an opportunity to do good shit and get it funded through that market. But we can't always be. It's a tricky market to work in because like in the commodity markets, farmers hate it when commodity prices go like this and then they go like that. They go like this and go like you can't plan. It's horrible, right? And so that's essentially what the experience is in the carbon market as well. Well, in all of my submissions to government over the years, I've said that the ETS is a trade system, not a cap and trade system. So there's no regulatory obligation for the emitters to reduce emissions. It's a tax. They just buy all carbon credits for all of the emissions. And if their emissions keep rising, they just buy more carbon credits. It's not their fault. That's the way the government designed it, which I think was dumb. Because somebody might say, well, they got to buy these carbon credits and spend millions of dollars. Yeah, but then they just raise their prices to cover that cost. And so they just pass that cost on to you. And so those entities don't have any exposure to the carbon price. Neither do their investors, right? The only person exposed to the carbon price is you when you fill up your car with petrol or turn on the light. But the carbon price portion is so small that you don't notice it. And I've described this as homeopathic carbon pricing. So that the quantities are so small that you don't notice it, which means this doesn't function as a price signal for us to change behaviour at the petrol pump. We need a cap and trade system. We need to put a cap on the emissions of all the big emitters and say, dudes, you currently emit 100 million tonnes a year. From now on, you're only allowed to emit 70 million tonnes. And that's a cap. Then they've got to find a way to reduce that emissions, and they're going to have to innovate and invest in energy efficiencies and so forth to do it. So that would be one way to do that.
The hardest thing about that, though, is determining what are emissions and what aren't. And the best example I can come up with is methane. So it depends whether you call it, whether you consider it to be a pollutant or not.
This is politics. So you've got to get a result that the whole country can get behind.
Yeah, the only way the whole country can get behind it is to actually know about it.
Exactly. I agree with you. Well, I agree with you. And once you get everybody in agreement, you can have a system that can work. Governments also have power, so they can implement things that we don't agree with, and then we can unelect them. Those are the sorts of dynamics we work in. But sorry, I keep yarning. One of the biggest problems, I think, is that New Zealand, back in early 2000s, as a nation, created a polemic. And that was caused by the Labour government, who put a fart tax on farmers and didn't put the same tax on urban landfills. It was such a stupid move. It was a massive own goal. And people rightly drove tractors up the steps of Parliament. But what that did is it set us back 2 decades at least, I reckon, in cultivating a nation-building, community-based response to a common threat. Because the people, for example, who are under the most threat from climate change in New Zealand are farmers, are most at risk. Urban environmental climate change activist hippies don't commit suicide in a drought, but farmers do. And farmers in East New Zealand are exposed to more and more drought and more other extreme weather events. And as a nation, we haven't all gone behind and said, look after the farmers. I used to go to the climate marches, the schools, and I had a sign which says, farmers on the climate front line need our support. That was my banner. And the point is to try and work with the communities rather than at loggerheads. And at the moment, the polemic has prevented a cross-party agreement on climate change. And without that, you're just not going to get what you're suggesting.
The politics of climate change is trying to work in such a way that somebody else always pays for it. That's
right. Yeah, for sure.
It's run by the majority, and the votes are the majority, run by the minority.
Cross-party agreements are the only way to deal with big things like defence spending, superannuation, climate threats. Yeah.
It's great. It's a good spiel. So for Renee, you live in a region that navigates the issues around exotic forestry. How do you see these markets supporting better land decisions going forward?
Yeah, I guess the blunt tool of the ETS is solely looking at carbon. In a region like ours in Tairāwhiti, where we have really vulnerable landscapes, looking solely at carbon means that we've planted our fast carbon machines on these landscapes. And yes, the carbon machines, but they are not considering all of the other impacts. And so that's where I guess the emergence of the biodiversity markets and other nature markets, where we start to consider the range of things that is happening in our ecosystem, might be a way for us to incentivise moving beyond just a carbon type approach. In Tairāwhiti, anyone who's been following what's happening there, obviously we've had really extreme weather events which have caused us to become more aware of some of the decisions that we've made in the past, and so it's going to force us to have to make these changes. The economics can't continue to drive that behaviour. Yeah.
Absolutely. Tim, are you seeing similar sentiment with the work you're doing as well?
Yeah, well, when the carbon price was high, there was definitely the opportunity for landowners who are nearing the end of their tenure to sell their land at a price that really wasn't attached to the market. It was a distortion of the market, with the price of carbon being very high and climbing quite fast. The result of that was a lot of full farm conversions, which is the perverse outcome I mentioned earlier. That's not something that you would want to do if you're retaining your land. And because of that, if you're looking at integrating more trees into your land, you're not thinking, how can I get the most dollars for the least input? You're thinking about the bigger picture. How can I plant trees that will enhance biodiversity, that will have timber value in the years to come, that will help with pasture management and even provide fodder for cattle and sheep. So I think this is a time now when the carbon market in New Zealand is rather stagnant, or it's sort of recovering from a big drop. It's allowing landowners to think a bit more broadly and strategically about how they might employ tree planting and ETS revenue into their platform, rather than the whole farm conversion has been obviously the legislation's changed over the last year or so around that. So that's, if you want to register, I won't go into the details because it's a bit nerdy, but basically the option to register a whole farm of exotic trees in the ETS is no longer allowed. The MPO won't accept that. So if you want to actually generate some revenue through the ETS, you have to be a lot more strategic about what you're doing on your land with the trees, and that's I think that's an exciting position to be in as a landowner.
Thank you. Sean, this one's for you. We talk a lot about soil carbon, particularly in this space here, and we see in other countries farmers have access to those markets. Here, we don't really have access to those markets apart from Verdi, shout out to Verdi, doing some great work in that space. Why can't we tap into that yet?
It's nonsense that we don't have access to those markets. We've had access to those markets for 30 years. We just haven't successfully developed soil carbon projects that have got certified to international standards, sufficient to be issued in internationally recognised registries, to then gain access to international buyers who trust those standards and those registries in around the world. So the thing is so there's two carbon markets globally and in New Zealand. There's the compliance carbon market. Think rugby union and rugby league, yeah? Rugby union and rugby league, they look like the same game, but we know they're not. They're different. The same shaped ball, and they all pile into each other, but they're different games with a different market. The compliance market, think rugby union. The voluntary market, think rugby league. With the compliance market, the buyers have a legal obligation to buy. They have to. So clearly there's demand there, mandated by law. Globally, at the intergovernmental level, the Paris Agreement is a compliance carbon market. The Kyoto Protocol was a global compliance carbon market between countries. Domestically, the European Union emissions trading scheme is a compliance carbon market. There's a compliance carbon market in Japan, in California. There's one in New Zealand called the emissions trading scheme. But globally, there's also a voluntary carbon market. Remember rugby league. And the key difference is that the buyers do not have a regulatory obligation to buy. It's a wee bit like the voluntary pencil market. You don't have to buy pencils. You can if you like them. You know, look at my pencil collection. I got lots of different colours. I can buy them and I want to buy them, so I buy them. So the ice cream market, it's not a compliance market. You don't have to buy ice cream. And so most of our markets are voluntary. The voluntary carbon market is one example. But the buyers are different. In the voluntary carbon market, they're people who want to buy. Who wants to buy carbon? Spend money on looking after the planet. All right, hippies like us that want to look after the place and spend money and willing to spend money on it. But what might motivate people who are not like us to do the same? This is where we have carbon-related claims. Voluntary claims like net zero carbon or climate positive. Some sort of carbon-related claim where a business goes, yeah, I hate nature and I don't believe in the climate system. I don't even think we have a climate. We've just got weather. But in order to get access to capital, in order to sell my good shit in markets, the market intermediaries are telling me to do ESG reporting, environment, governance, and environment, social, and governance reporting. And in the E for environment, the first thing you'd typically do is the C of carbon. And so you'd measure your carbon footprint, do a greenhouse gas inventory for a company, then you'd use that footprint measurement to do a reduction plan, and then you'd discover with all the effort and all the spending you could do, you can't get to zero through emission reductions alone. One of the reasons why you can't get to zero voluntarily or even in a compulsory way is that last time I checked, I'm not a plant. And so I'm an obligatory emitter at both ends, right? And I'm a human. So there's no chance of me ever being a zero carbon being. And that's also true for organizations with collections of humans, and not just from our physiology, because every time you use energy, there's carbon emissions. Every time you import something, your freight, there's carbon emissions all over the place. You can reduce them to just, even with a lot of effort, to a certain level. You might go from this to this, but you've still got between here and the floor, which is either impossible or it's prohibitively expensive to do it. But if you want to take responsibility for that pollution that you've still emitting after you've reduced your emissions, you can pay somebody to cause some good shit to the climate system over there. And that's called buying carbon credits. And so you offset those residual emissions, and then you can get to a net zero position. It's impossible to be gross zero. So anybody who says net zero is evil doesn't know what they're talking about. Okay, and in fact, one of the challenges in this space at the moment, we as our business, we do greenhouse gas inventories, we do emission reduction plans and certification of organisations that want to go net zero. There's 2 certifiers in the nation. One's government owned called Toitu Envirocare, and the other is us, the main certifiers for carbon related claims. So we've got a lot of experience in this space. But that's the voluntary space. That's what voluntary buyers are doing. And the reason why they're doing it is to get a net zero claim. And in the soil carbon space, there's been an opportunity for 30 years to just get on with it. Just go and get a methodology, apply it to the land, put it through an international audit system, choose your international standard. The international standard is available for soil carbon production and soil carbon credit production. The verified carbon standard is certainly one of them. It's the leading one in the world. We've had ECOS, we've done 4 projects in the international voluntary market in the forest space. So we know it can be done. It's a matter of choosing a methodology that will work. The thing is, with soil carbon, it's really difficult it's hard to measure, and it's hard to prove that your intervention caused that change in the rate of carbon sequestration in the soil. Because carbon credits are not produced from the stock of carbon in the soil, they're produced only from the change in that stock, when the stock of carbon goes up. And it's that stock change that you've got to measure, and you've got to then do an intervention that shows that that goes up. And you've got to prove that that going up was caused by you and not by the seasonal variation in climate or whatever. So that's one of the reasons why it's hard. There are lower cost and easier methodologies in the soil carbon space. One great example would be biochar. Biochar is easy to measure. It's very straightforward. And then you plough it into the field, and you know that it's in the field. And even if it washes off in a flood, then it's gone into the river and it's part of the sediment, but it's still sequestered. So biochar is one example of among the lowest hanging fruits in the soil carbon space. And there'll be others, and hang on, we've got one here and then one there.
So this farm's a relatively small land area. Does your company provide aggregation services? So like if someone
Yeah.
wants to put a project together?
Sure. I mean, anyone working in this space needs to be operating at a scale where you can cover all of your costs, essentially. And there are fixed costs in the voluntary market. It typically will cost a few $100,000 to just do the transaction costs, right, for the first project. But once you've done them once, then you're not going to be anywhere near as expensive second time and ongoing. Possibly, but not necessarily. The way to answer that question is to do is for somebody ideally to fund a demonstration project and say, okay, well, let's look at where it's demonstrated technically and financially. You do both a commercial demonstration project or a commercial pilot would be the way to do it. Yeah, for sure. So biodiversity markets at the moment are just in their infancy, sort of where carbon markets were 30 years ago. But there are emerging standards, we're one of them. Emerging registries, we're one of them. And the thing is, you don't have a market unless there's demand. And in the carbon markets, what was done by government was to mandate demand. Remember the compliance market where the buyers have to buy? And that's what created, for example, the NZ ETS. If it was voluntary to buy in the NZ ETS, it would be a very small market. So the biodiversity markets, for them to work, governments, I believe, need to play a role in helping to stimulate demand. And one way to do that, or there's a range of ways to do that, but demand is important. But once that starts to kick off, you'll be able to have a range of different activity types, and activity types like soil biodiversity. In fact, a look after the soil type project, I believe, would be a lot easier to do in the broad non-carbon payments for ecosystem services markets, because you're not having to measure the carbon and prove that you caused the carbon to go up. If you're doing soil biodiversity, imagine you're increasing literally the biodiversity of a soil by going to regenerative agricultural practices, for example. At the moment, it is only a voluntary market, right? But with any market, the only way the market will evolve and develop is if demand develops. And in the demand, well, example, we are selling biodiversity credits daily, weekly. Most of our buyers, who likes blended whiskey? I prefer single malt, right? But blended whiskey is kind of cool because you get to have shitty tasting cheap whiskey and you just put a little bit of really expensive single malts in there and it flavors it up really nice. But it's still not too expensive. And so we sell blended whiskey in the carbon market, in the voluntary, well, and we could also do it in the compliance market, where we get a bag or a bottle and we put in our carbon credits and then we sprinkle in some biodiversity credits and we sell that to buyers, biodiversity enriched carbon. And most of our biodiversity credit sales are in that space. And we're fourth in the world in terms of reported trades in biodiversity markets, mostly through that mechanism. So we just need to innovate. Let this go into the carbon markets. The government said it would like it to happen. We're doing it. We just need to help. It's a marketing challenge, really.
I just to add to that, one of the mechanisms that we're exploring, because yes, the measurement of biodiversity is super complex. Actually, particularly in our vulnerable landscapes, where we might see a big storm come through and then wipe out the measurements that we have been taking, is to measure not just the outcomes but the work that's done. So the time that people are putting into these projects can be, we believe, part of the measurement and the information and the data that goes into showing that the biodiversity is improving. So yeah, moving beyond just that outcome measurement and looking at the work.
And we have the same. That's been a discussion globally. You know, are biodiversity credits only the measured change of biodiversity status in the ecosystem, or are they the measured good shit that people do to look after ecosystems, or both, right? And so in our system, with projects have the option to go down either of those pathways. And so the biodiversity market, the biodiversity credits market, is probably better understood as a biodiversity conservation market. There's not a market for biodiversity. No one's trading biodiversity. People are trading units that represent measured, reported, and verified good shit that people are doing to biodiversity in a particular landscape to look after the place. And therefore, there's no intellectual property being traded. No Indigenous peoples are losing out on their ownership of taonga. It's just people wanting to look after that taonga, and the units are priced at, well, what does it cost to look after that taonga? And that's how that market is starting to emerge.
Yeah, and I suppose that goes back to your previous questions, like how do we ensure that those on the front line of things are empowered to be the drivers of this? And that's one of the ways as well, because the work that they are doing can be responsive to what that particular place needs, because it's different everywhere, right?
And just to cap that off, if you had to measure the beneficial change in the target system in order to create carbon credits, you'd have to plant your forest. Well, before you plant your forest, you measure atmospheric CO2 concentrations above the forest. And then you plant your forest, and then you measure atmospheric CO2 concentrations after the forest has been planted and show that atmospheric CO2 concentrations are now different because of your forest. So the carbon market doesn't require that. And the biodiversity market shouldn't either. And so biodiversity credits are about looking after the place, and you use a low cost to measure proxy of good shit in the biodiversity space and turn that into units and get them measured, reported, and verified. You need if you don't have a secondary market, then you don't really have a market. So a secondary market requires a project to be able to have the farmer of biodiversity or soil sell that to an intermediary who then on-sells it to customers in a retail setting, or even a retailer, even a supermarket, right? That's a secondary market. And in order to have secondary markets, you need units issued in registries so that the value chain can be tracked and traced. But those units don't have to be exactly the same. You think about a delicatessen. It's got stinky cheese, it's got olives, it's got weird-looking bread. So there's lots of different products. They're not all exactly the same. Carbon market's all the same, right? It's all 1 tonne of CO2. However, some of that CO2's got orangutans in it. So it's a nice flavoured CO2, but it's still a tonne of CO2. Another one might be landfill gas project that's been reduced at different co-benefits, but it's still a tonne of CO2 that's been traded. And the biodiversity, some of the biodiversity market actors have tried to create the equivalent of a tonne of biodiversity. And people like me have said, it's impossible. Don't try. Treat it like a delicatessen. Multiple things, but as long as they're issued in registries and there's measurement, reporting, and verification.
Yeah, I mean, I can speak to our example on our whenua Māori land block. It has been super complicated and long, and so I've gone to my own whenua first to try and figure that out. It might be the hardest place to go, but got to go there first. For context, 300 and something odd shareholders, owners of the land. You never buy or sell. It's passed on intergenerationally. There's like 7 trustees who are making the decisions. But the process for us has been to engage all layers of the community wrapped around that land block, first in just understanding what even could this be, then in the design of the projects, then in the feedback loops back into the market template designs, the data collection, and we're still in the process of that, and we're a good 5 years in. So I don't know if there's any shortcuts apart from having willing participants pilot some of these things, and then others kind of come along once those are de-risked by little pilots. And I know we're running out of time as well. There's a second part of the question, but I'll pass it back to you.
You can finish that off and then we'll wrap her up.
Oh, yeah. Yeah,
That's it?
Yeah.
Cool. Well, obviously these are all very knowledgeable people in the space and they're going to be around most of the day. So if you want to have any further discussions on this, pull them aside. But this has been very knowledgeable and I've learned quite a lot here. And I just want everyone to put their hands together for these three fantastic people.